Excellencies, distinguished guests, ladies and gentlemen. It's my great pleasure to join you on the second day of this important Capital Market Summit. I would like to begin by appreciating the organizers, partners, and all participants who are contributing to this timely dialogue on strengthening Ethiopia's emerging financial architecture. Over the past years, Ethiopia has embarked on a national effort to integrate climate resilience, environmental sustainability, and economic transformation. This work reflects our country's long-standing commitment to building a greener, more prosperous, and climate-resilient future for all citizens. As a part of this national agenda, Ethiopia has developed several foundational climate policy instruments, including the long-term low emission and climate resilience development strategy, the nationally determined contribution, and the ongoing development of the carbon market strategy, which forms part of the major national initiative to establish a government-led carbon market ecosystem. In addition, Ethiopia is working to strengthen, systemize, and harmonize its measurement, reporting, and verification MRV system, an essential foundation for accessing climate finance, ensuring transparency, and enabling high-integrity carbon market participation. These national efforts are not merely policy exercise, they are strategic investment to position Ethiopia to mobilize climate finance at scale, attract responsible private investment, and capitalize on global opportunities in the green economy. With the establishment of Ethiopia's capital market, the country is entering a new phase in its economic modernization. Yesterday's discussion, and in fact today, will highlight both the momentum building in this space and the collective responsibility to ensure that this market is transparent, credible, and aligned with national development priorities. Today's focus on green financing is therefore timely and critical. The transition to a climate resilient, low carbon economy requires financing far beyond what the public sector alone can provide. It calls for innovative instruments, partnership with the private sector, and a capital market capable of channeling long-term investment towards climate smart sectors such as energy, transport, agriculture, forestry, industrial efficiency, and sustainable urban development. This is exactly where the nexus between green finance and capital market becomes transformative. Capital markets can mobilize and direct finance into green bonds and sustainable linked bonds, climate-aligned equity investments, carbon market instruments, blended finance structures, and climate resilience infrastructure funds. The government of Ethiopia remains fully committed to accelerating economic reforms while embedding climate sustainability as the center of development through the homegrown economic reform agenda. The country is strengthening regulatory institutions, modernizing the financial sector, and deepening macroeconomic resilience. Green finance is not a parallel agenda. It is a core pillar of Ethiopia's long-term development strategy and essential to unlocking new engines of growth, competitiveness, and job creation. A functioning capital market will be a critical instrument in enabling this transition. Realizing the targets of Ethiopia's 10-year development plan and climate resilience green economy strategy requires bridging a financing gap that public resources alone cannot address. The government of Ethiopia is committed to creating an enabling environment that mobilizes resources for climate resilience, shifting the paradigm from public sector dependence to a collaborative model involving private market participants and establishing rigorous national monitoring framework to ensure that market-paid financing translates into tangible socio-economic outcomes, guaranteeing the capital market growth aligns with broader development milestones. As we engage in today's sessions, I encourage all participants, regulator, financial institutions, development partners, the private sector and academia to collaborate, innovate, and identify practical solutions that can strengthen Ethiopia's green economy ecosystem. Let this summit serve as both a platform for shared learning and a catalyst for action. The grand transition is not only a climate imperative, it is a unique economic opportunity that can define Ethiopia's future trajectory. Ladies and gentlemen, with this remark, I wish you all productive and a forward-looking discussion, and I thank you.
Next, we have a panel bringing together leaders shaping regulatory excellence across the continent. The session's title is Regulatory Excellence, Africa's Capital Market Regulators Speak. Our panelists are Ms. Hana Tehelku, Director General of the Ethiopian Capital Market Authority, Mrs. Josephine Ossiya, CEO of the Capital Market Authority of Uganda, Mr. Thapelo, CEO of the Rwandan Capital Market Authority, Mr. Nestor Ikeagu, Director of the Legal Department at the Securities Exchange Commission, Nigeria. This panel is going to be moderated by Mrs. Hikmet Abdella, CEO of FSD Ethiopia. Please help me welcome our moderators, panelists to the stage.
My panelists are taking their seats on the stage. Let me say good morning, everyone. I don't think I like the energy in the room. Maybe it's too early in the morning. Let's have a round of applause for those of you that stayed until 7 yesterday. And another round of applause for you, for those of you that have come this morning. Let me hear you, please. Thank you. The context of this panel is that capital markets regulators across Africa face the complex challenge of promoting market development while safeguarding investor protection and maintaining systemic stability. As countries expand their capital markets activities, supervisors must strike the right balance between enabling innovation and ensuring prudent oversight. This Pan-African panel brings together securities regulators from established and emerging markets to share their lessons learned in building credible, resilient, and growth-oriented market systems. The objective of this panel is to clarify how regulators determine the appropriate balance between principle-based and rule-based regulation within young and evolving markets, explore effective regional coordination mechanisms to monitor cross-border security transactions and prevent regulatory arbitrage, highlight strategies for regulators to maintain credible and strong informance capacity while simultaneously acting as advocates for market development and innovation. Kindly, round of applause from my panelists, please. Let me start with Josephine. Josephine, you're heading a capital markets authority that's been long established since 1996, and you've taken over a good friend of ours, Japheth Kato. Just reflect on what it feels like to take over someone that's been so iconic in terms of capital markets in Africa. But generally, how does CMA Uganda balance investor protection with encouraging more market activity and listing in Uganda? Which interventions do you think deepen the market traction, and which fell short of expectation? Perhaps what are the key lessons around that?
Thank you, and good morning, everyone. Yeah, it's very difficult to fit into the shoes of Japheth, but after Japheth, we had also another CEO called Keith Kalejira. So I am just about maybe 1.5 years, in the position. So at Capital Markets Authority, so we have a dual mandate. The Act gives us the mandate to regulate the market, but also to carry out market development. So that means that you have to balance regulation, investor protection, but also you have to encourage the market to bring products into the market. So one of the things that we are doing is we are trying to evolve our regulation to be more principle-based than prescriptive. So when you have a regulation that is prescriptive, it tends to curtail development. So what we are doing, we are moving to a principle-based regulation which allows flexibility for the issuers and for the market intermediaries to develop products, but bearing in mind the issues of investor protection. We've also taken an approach of where we are now licensing self-regulatory organizations, so the SROs. So we delegate some of our responsibilities to the SRO. So far we have one SRO, which is the Uganda Securities Exchange. So we give them the delegation to make certain approvals, so that fastens our process, as opposed to all the approvals coming from the Capital Markets Authority. So that again also creates that flexibility and tries to cut the lead time in terms of anyone who wants to come to market. But most importantly, we have now put in place what we call a regulatory sandbox. So a regulatory sandbox is really an environment where you test the products with the intermediaries, with the issuer, understanding the risks, and also seeing what are those aspects from a regulatory viewpoint that you need to regulate. And then once you're then comfortable, you then release that product into the market. So what that does is both the issuer and the authority know the risks that we need to cover, but we are also cognizant of the fact that innovation will always run ahead of regulation. So we let the product go out into the market, and then we then ascertain, are there any regulatory aspects that we need to introduce, or are the current regulations that we have able to cover this new product? So in that way, so you get new products out into the market and allow that innovation to happen, and therefore the aspect of developing the market. But we also do have a committee where we work with government on how, and that includes the central bank, the Ministry of Finance, where the market intermediaries are represented, the treasurers from the banks are also represented, the exchanges are represented. So we have that forum where we sit and say, what are the quick wins that we need to do? Who will take what responsibilities? The intermediaries have their part, the bankers have their part, we have our part, and we work together in a collaborative way just to drive the market forward. So what are some of the things where we have gained traction? Firstly, it's around the collective investment scheme. So the collective investment schemes in Uganda are mostly open-ended, and that means individuals are able to participate in these unit trusts. And I see in the last 1 year, we've been able to double our assets under management. So we are now sitting at about $1.5 billion in terms of asset under management. And it is, the scheme, the product is designed in such a way that even the most ordinary person can participate. So you need just about, which is 10,000 Uganda shillings, say about $3 to be able to open an account and start investing. And we are using technology to do that. So they can do that using a USSD code just to start investing. And even for the government securities, the amount for you to start is $100,000 which is about $30 as well, to participate in the issuances that government does, the treasury bills and bonds. So that's one of the things we've done. In terms of, we worked with government to also get tax incentives for private equity. We believe that private equity is going to create the pipeline for those companies that are coming to list. So the private equity firms and in the individuals are now tax exempt. And the law originally required that private equity firms needed to be limited companies. We've also amended that to allow them to be limited liability partnerships so that we can domicile a lot more. We've also worked with government on the national broadband policy, where all the telecoms have to list at least 20% of their shareholding to the public, and that we've seen 2 listings so far of MTN and Airtel, and all these were oversubscribed. We are also working on the Sharia compliant products, because we think that part of our society had been excluded because they don't believe in interest-bearing products. So we are also coming out with regulations to guide that. All our exchanges are getting ready to list some products. Even government is considering listing, doing a sukuk bond for infrastructure. So I think for us, we see those are some of the things that we've gained traction. Where have we fallen short? Voluntary listings. I think the mindset is that the private organizations fear the transparency and the disclosure and the scrutiny that comes with being on the capital market. So that's something that we're working on to showcase the benefits vis-a-vis that maybe the burden that comes with listing. And one of the things we are pushing is, particularly for the family-owned businesses, is it gives your business longevity. Even when you're not there, your business is going to continue. We've seen many family businesses, once the originator dies, the business kind of ends. So we are trying to use that as a means to encourage families to keep their businesses going through generations. But I think the key lesson for us is, for the capital markets to thrive, you need all partners on board. You need government, you need the intermediaries and the different stakeholders. You need the development partners to help you in terms of capacity building. Most of us, our budgets are tight, so you need those partners who are able to come and cover that gap for you to drive those initiatives that you're looking at.
Thank you, Josephine. Can I please ask you, perhaps at the end of the last question, can you reflect on perhaps the harmonization between the different regulatory authorities that you mentioned earlier? I'll come back to you later. Thank you. Thapelo, Rwanda is known for regulatory clarity and efficiency. What core principles guide your regulatory philosophy today? And looking back at Rwanda's capital markets reform, what regulatory approach or initiatives worked particularly well and what did not work?
Yeah, we work together in MICs and even in regulation with Uganda. Thank you very much. I think, the core of regulation in capital markets is benchmarked with certain ISCO principles. Any regulations that you do have to look at the international principle, what it says, because the market is a market because it's composed of different participants, domestic and foreign participants, and therefore any rule that you do needs to reflect that in place. And one of the things that we adopted in Rwanda is a principle of adopt and adapt. You adopt the principles or the rules from outside, even in terms of harmonization, but also make them relevant to the local institutions. Because there's no need to do rules that, some of the institutions locally can't conform to. I'll give you an example from the rest of Africa, due to my experience in African markets. When you look at the bond listing rules in most of the African countries initially, they were prescriptive, like she spoke about the concept of prescription, in terms of, you need to have a minimum, for example, a minimum of 200 subscribers. That is one thing that was just copied from somewhere else. And then everyone else in the continent ended up copying. And it doesn't make sense. I mean, if an institution want to come to the market, and there are 10 investors who want to buy their bond, I mean, what is the problem? I mean, there's no problem. So if you say the minimum of 200, it closes up a lot of other people outside. Yeah, bring the bond to the market and let investors who are probably not interested initially to come and buy it in the secondary market. I mean, that's one of the things that we do. And also, most importantly, that also we realize that it bars a lot of SMEs to come to the market. And I think a change in that perspective in terms of the rules ensured that we have a lot of, a number, let me not say a lot because it's starting, a number of SMEs coming to the market. I think that is working quite well. We have SMEs coming to the market to raise capital, and some of their bonds become oversubscribed by 200%. And I think it's something that worked well. But also coupled with that, the gap which we saw is that there's a lot of potential in even in the Rwanda market, like every other African market. But the big difference is that majority of the potential issuers lack a sense of basic knowledge in terms of coming to the market, in terms of the requirements of the market. So that is why in Rwanda we introduced the investment clinic. The investment clinic targets a number of companies that can be potential issuers, and then we handhold them through the process of listing to the market. And I've heard about a number of successes of companies that were in the investment clinic and later issuing bonds. And ordinarily, I think because of the fear for the market, most of the companies prefer to issue bonds first, and then with the aim to ultimately move to equities. But in terms of the regulatory approach, one thing that we never do is we draft rules and regulations, of course, but we do very wide, well-organized market consultations. We never take the rule to either the law to parliament or to wherever without having done at times more than even one consultation, which takes time to explain the rules to the market participants so that it ensures that, we are making rules that are understandable, and we are also making rules that people actually can comprehend. We are not just copying rules because, we saw them in some European regulator and stuff like that. I think that particularly works very well for us. And I think because of that, we've had successes in a number of companies now getting an opportunity to ultimately come to the market. But of course, Rwanda, Uganda, Burundi, and Tanzania are members of the East Africa Regulatory, is it an association? Yeah, association. I'm not too sure if Ethiopia is not yet in. I hope they will wake up. Possibly they'll join us because it helps us, as regulators, myself and my fellow lady from Uganda and other guys from East Africa, we come together about twice or so every year. We share harmonization in terms of the rules. We share challenges, and we are able to work together. That is why they have a good working sandbox. We also have a good working sandbox because we share ideas. And one of the projects I think that you are going to be working on is the rules for crowdfunding across the region. So this actually helps. And it also not helps in terms of that. It also helps in terms of aiding cross-listings across the market and also even trading. I hope I covered some of your questions because I didn't want to repeat most of it.
Yes, thank you, Thapelo. But for just for the record, how many companies went through your investment clinic? And were there any family-owned businesses?
Yeah, I think we have had close to 15 companies for the investment clinic. One was family-owned, but of course it transformed into a proper governance. With family-owned companies, you have the founder who, because he doesn't know the market, he wants to be the board chairman, and he wants to be the CEO, and he wants to be the founder, things that are not actually accepted into the market. So when you take them through the clinic, they are now able to know that, when you go and raise public money, you need some level of segregation in terms of these duties. You can't be the chairman, the CEO, and the founder at the same time. But ultimately, they have come to the market. They have raised about 5 billion Rwandan francs once, and then also they have come for the second time to raise it. And ultimately, I think they are now moving towards a potential equity listing.
Thank you. Thank you. Let me come to Nestor. Nigeria supervises a dynamic and complex market. How does SEC Nigeria maintain strong enforcement, while also supporting innovation and growth? What regulatory tools or strategies proved most effective, and where did challenges persist? It's quite a lot of questions.
Thank you. Thank you for this question. For a model regulator like the SEC, we have such a dilemma because of our mandate, the dual mandate of regulation and market development. Our philosophy here in SEC Nigeria is that we see innovation and regulation as not as opposing forces, but the two sides of a coin. So for us at the SCC, Nigeria, we adopt risk-based principle enforcement regime, whereby we prioritize and concentrate on stability of the market. Our enforcement is targeted, it is deliberate, it is transparent because it is rule-based. We target high risk, the misconduct that will affect the stability of our market. We not just enforce for punitive sake. We enforce to be able to track those high risk issues like that affects the market stability, investors' confidence in the market. Then, on the issue of innovation, we have made significant progress as we always proactively engage innovators whereby in a situation whereby we have a regulatory incubatory program and a fintech hub. For us in SCC, when you have an innovation, we will want you to share with us at that program to enable us understand that innovation before you launch. We also have a regulatory sandbox for environment for testing of these innovations. We give guidance and we suggest situations how we can best design these programs to enable us run with it and to suit our objectives. Then on the issue of the tools, the regulatory tools, and the strategies that have proved most effective is these innovations. The issue of the regulatory incubation program and the sandbox, the regulatory sandbox. This is most valuable. Also, we have a structured stakeholders consultation whereby when we make rules, we expose the draft to the stakeholders and get their feedback within a time frame to be able to. Then the next that has proved very valuable for us is a situation of whereby we strengthen our SROs. We have a lot of SROs with us, like the NGS, like CSCS, who have other NSD and the rest of them. We strengthen them, we collaborate with them, and give them for easy compliance and the shared vision, shared responsibility. They have responsibility in the market for this. It has worked for us. It has relieved us of that regulatory. We know where we'll concentrate, while where they have theirs. Then, the next thing that have worked for us is the issue of risk-based supervision and thematic inspections. It has proved greatly for us. Then, the significant challenges. First is the pace of technology against the normal traditional regulation we know about. Then the regulatory arbitrage and the cross-border complexity. The complexity of the cross-border, whereby the digital assets providers can go across jurisdiction. But that our own regulation still remains in our own jurisdiction. So we now be having a concern as to who regulates what, at what point does your regulation start, and what point does this one end. Then the next is the issue of funding constraints. The funding constraint in respect of acquisition of sophisticated tools, sophisticated surveillance tools, which we need to use to monitor it. Even the capacity building, because we need to build ourselves, our staff, to gear up for the challenges and the emerging areas. So it is still, the funding is still a concern. The next concern is the issue of the low sophistication of our retail investors. Because of their low sophistication, they are always vulnerable for market abuses in the market. Then the last one is we still have the persistent pockets of low compliance culture when some of the operators are still not complying. But thank you very much.
Thank you. Last but not least, Hana, perhaps you can just reflect on what early insights are you gaining about what resonates in the Ethiopian market, and what areas have been challenging or requiring adjustments.
Thank you for coming back, and I want to thank my fellow regulators from Uganda, Rwanda, and Nigeria. And I also see participants mostly from Nigeria, of course, and other African countries. Thank you so much for joining us at this summit, and everyone else from Ethiopia, from the public sector and the private sector. We appreciate your presence. Hikmet, thank you so much for your question. You know, we've learned a lot in the past, I would say 2-3 years. It's a very nascent market, with all honesty, and, you know, and for the purpose of managing expectation. Because one of the problems was, as it has been mentioned yesterday, actually, establishing a system, a new system, it's not an easy task because it has a lot of moving components. As you've heard, we wanted to build on institutions like ECMA itself, the exchange, the other participants in the market, and introducing technologies that can facilitate and support the development of capital market in Ethiopia, establishing, you know, a nexus between these institutions, and integrating between this institution was not an easy task, and it's not completed yet. So building a system takes time, and there has to be a patience and intentional building up towards building a system in Ethiopia. So one of the, I'd say the challenge was that. And the second challenge, I'd say, is someone was commenting on my dressing shift this morning, because I wore a white flashy dress yesterday, but today I'm wearing all black. This is exactly the balance that a regulator has to do. Because when you see the objective on our proclamation of ECMA and the capital market in general, is the first one is investor protection. Of course, the second one would be introducing a fair, transparent market, orderly market, and then reducing a systemic risk. The fourth one, and the important one, and somehow kind of on the surface looks contradictory with the investor protection objective and role of ECMA. You know, take the yesterday's flashy dress as market development work, kind of, you know, coming to your doors, knocking on your doors to come to the market and doing, you know, capacity building programs and other market development works. On the other hand, you need to be firm and assertive on your regulatory expectations. So maybe that's transparency, that's the Public Offer and Trading Directive, that's the requirements from the Service Providers Directive, the requirements on KYC and AML expectations. You know, this balance was not an easy task to do. I don't think it's a unique case for Ethiopia, but I'm sure my fellow regulators will agree on that. This balancing between these two was not an easy task, and it's not going to be an easy one going forward as well. You know, the other lessons we've learned is that we we have tried to learn from other markets, including African markets, from our fellow regulators, but from the international markets across the globe, the West, the East, and everywhere. But the other important task we've done and we've learned from our exercise was making sure your regulations and your approach to regulation is aligned with your context where you operate in. So it's good to bring in tested regulatory tools from other markets, but making sure that it works for your context is quite an exercise. I agree with what my fellow regulator from Thapelo, Rwanda said on adapting and adopting tools from other regulators and regulatory tools, but it's very important to also adapt it within your regulations. And you have to be open to learn every day and provide flexibilities. Regulatory sandbox was mentioned by my fellow panelists. I agree with that. We've launched our regulatory sandbox, I think a little over a year ago. We have companies coming in. We are learning every day how to interact with the market and listen from the market what has been their experience interacting with ourselves and other market participants, and then provide flexibilities that are necessary. Even I'd like to give you one example, Hikmet, maybe how we kind of adapted to the question from the market. In our service providers directive, investment banks were the only ones that are allowed to do transaction advisory service, to write prospectus and bring companies to the market. So while we were trying to license and see the market, we identified a gap, we identified a place of flexibility, and then in the public offering directive, it was introduced close to, I'd say 8 months after the service providers directive, we introduced a flexibility whereby in a corporate form, securities investment advisors to do a transaction advisory services when they are adequately capitalized and adequately staffed. So we've learned flexibility, but without losing the objectives and principles of regulations in Ethiopia. So I'd say these are the lessons we've taken.
Thank you, Hana. We're under pressure for time, so I'll give 2 questions at the same time for our guests, and then Hana to reflect and close. Perhaps regional coordination, regional integration is the call of the day, right? So how do you guys see this regional integration accelerating in the eyes of capital markets and the stock exchange? This is a question for the 3 of you. And perhaps for your young peer, Hana here, what is the one advice that you can give her in terms of what she should concentrate on in the next year, perhaps? 2 questions each.
So thank you. In terms of regional collaboration, and Thapelo talked about that. So in East Africa, we have the East Africa Securities Regulatory Association, of which currently I am chairing that association. So one of the things, I think the valuable lessons that we've learned, and this association was actually formed almost immediately after Capital Markets Authority Uganda was formed in 1997. And I think for us, the key enablers that I see for effective cooperation is 1, as institutions, at institutional level, we must collaborate. We cannot only wait for when we have the meetings to be able to discuss things. So 1, institutional collaboration is very important. And in that way, you're able to harmonize your standards, coordinate your responses, even the supervision of licenses. You will note that in East Africa, most of these intermediaries are in all countries, so it even makes it easier to license and supervise. The other is the legal and policy harmonization, which we are trying to work on. Again, Thapelo hinted on that. We are working on harmonized guidelines for ESG, and FSD Africa is helping us with that. We are also working on crowdfunding rules and guidelines, and even the Islamic ones, we're trying to see whether we can harmonize. We know that Tanzania is really ahead in that respect, so we are also going to learn from that angle. The other enablers that I see are a lot of information sharing. So usually when we are going to license an intermediary that is in all countries, we consult the other regulators and to tell us how how is this person in your market? Should we license them? Shouldn't we license them? We also do joint capacity building at these events just to make sure that we are all on the same page. Technology, we are working on the interconnecting the markets. There is the Capital Markets Infrastructure Project, which started off but stalled. But we now also have the Africa Linkages, Securities Exchange Linkage Program, where we are trying to link the exchanges so that if you are in any one of the markets, you see what's happening in the other exchanges. So again, technology for us, we see, is going to be a key enabler for that. But I think, what can I tell Hana? I think one of the things is that start by driving your government securities market, because that is going to set the pricing. Because the government securities are mostly seen as risk-free, so it helps to set the pricing for the other bonds, the other products that would like to come to market. But I think also the collective investment schemes, given the retail population that you have, I think it's a potential for mobilizing savings, for infrastructure development within the country. And therefore, I think that's something that you need to really focus on. And of course, you need to join EASRA so that we can learn together and see that, and there's a lot for us to learn as well from Ethiopia, given that you're coming in much later than us. Some of our regulations were based in old laws that we need to review, so we just need to work together in that respect. And I think focus your regulations on being principle-based and not being prescriptive. Thank you.
Thank you, Josephine. So maybe Thapelo and Nestor, can you take 2 minutes each?
Yeah, I won't get in terms of the aspect that she got in. She answered brilliantly. I think I'll get on the advice to Hana. I think a market is a market because it brings issuers and investors together. And therefore, I think my advice would be run IPO or bond clinics. Just use market intelligence to see which companies you can identify to bring to the market, and then you run IPOs. It takes time initially, but as soon as the first one comes to the market, which happened in Rwanda, showcase it as a success story. You'll see them running like they're running now in Rwanda. The second thing is on the investor side. I think there's a huge potential in terms of the investors, in terms of retail and everything else. I think you just need a coordinated approach in terms of that. I've been in Rwanda for 1.5 years. We're able to get more than 100% increase in number of investors to the market, even asset under management. And when you do it, don't do it alone as a regulator. I mean, get the guys from the stock exchange, get the guys from the unit trust, and then you run a market together. Because the way we're doing it in Rwanda is that when you go out to some other towns in the country, we have our brokers to open up CSD for people who want to invest. We have our unit trust guys who are also opening up accounts for people to come. And it was a huge success. Thank you.
Okay. Right. For us, on the issue of regional cooperation, we in the SCC Nigeria recognize that we cannot do it alone, that we must collaborate. So in that stand, we have strengthened our bilateral and multilateral MOUs with other regulators across Africa, but particularly in West Africa. We have collaborated with them based on the MOU for issues of supervision, investigation, and information sharing. Another initiative is issue of our participation in the issues of continental bodies in the regional in our region, whereby like we are actively participating in WASRA, we are participating in AMEC, and our goal is always to strengthen and harmonization of standard. Our goal also is a situation of like a passport system whereby we are advocating that a platform licensed by a reputable regulator can operate across our West African sub-region, even Africa, even the whole African continent, with a college of regulators regulating that platform. The next thing we do is the issue of a joint cybersecurity initiative. We have done a lot across the WASTRA group in the West African region, issues concerning the financial system, that's connecting our financial system and combating that threat of the cybersecurity in West Africa. The second question, which you issues of advice. Mine is simple. I will advise ECMA to first invest heavily and immediately creating a critical human capital development. They should not solely focus on enacting elegant and perfect laws, building systems, advanced systems. Yes, those are good, but they are hollow where you don't have human capital to manage those things. So for me, they need to have a program whereby the regulators, the staff of the regulator, the exchange executive, the intermediaries, the operators, they should come together to learn, immerse themselves in a program whereby they will be able to learn from a jurisdiction, well-developed jurisdiction across African continent. Why it is? Because if they do that, they are providing institutional memory. They will accelerate learning to learn from those developed ones where they get it wrong and where they get it right. They will learn immediately. And the next will be the shared vision for their market, for the operators, the intermediaries, and all of them. So I say that a law is a document. Trading platform is a software. But it is the people that build trust, secure stability, and drive growth. Thank you.
Hana, can I just say one thing?
Sure, please.
I think the one that I really forgot is public education. So an uninformed investor is a protected investor. Now, for a new market like Ethiopia, you're going to find many of these unscrupulous people coming around to try and get money from the public. As you start teaching them about investment, someone is going to try and come and use it for a bad intention. So I think it's very important that as you do your public education, you also alert them about what those scams look like. Thank you.
Thank you so much for all the advice. I just want to take like 40 seconds. I don't think this advice is entirely for me. One of the principles we take into account when we think about regulation at ECMA is that collaborative regulation. So you've heard all the message to Hana, but it is for all of us. So I urge you all to support ECMA, to support the ecosystem, be part of it, and make sure this advice happen and capital market actually be the living engine for economic development of Ethiopia. I thank you all. Thank you.